Michael Burry just said that he was wrong. He was wrong about the stock market. He was wrong about risk on assets. I want to talk about that, talk about some of the big news in the market right now. And to be clear, I am at a new location. I've been awake for like 36 hours in a row, minus like a 2-hour nap. So I'm going to keep this short for you, but there are a couple big things happening. I do want to show you something though. This is my second time trying to film this video. That's what happens when you try to set up in a new location. Things go wrong with your hardware. But take a look at this. This is the view from a villa that we're at in Greece. So never been to Europe before, but this is not a bad view. I'm sure I can get you a better view in the next few days because this is nighttime here and I'm just trying to film this real quick for you. And we do have videos coming with another YouTuber here probably pretty soon. So be on the lookout for that. Now, thank you so much for staying through that intro. Please hit the subscribe button, turn on the bell notification so you know when I post future videos. And if you want to know what I'm buying and selling, you can check out the link down below to Patreon. Now crypto's down a little bit in the last 24 hours, down 0.2%, but Bitcoin is up. And we're overall looking pretty good. Bitcoin was just at $29,000 a few hours ago. Now, Michael Burry is saying that he is wrong. He was wrong about the market. He says, going back to the 1920s, there's been no buy the effing dip generation like you. Congrats. So you can hear a little bit of maybe resentment in his voice or in his tweet, but you can just see this chart here. Let me make myself a little bit smaller. Going back, they're saying that 2023 is shaping up to be the second best year for buying the dip. Basically, they're showing the S&P 500's average return following down days by year. So if we have a red day, what does the next day look like? And on average, we're seeing 0.3% so far this year, which is only beat out by a couple of years ago. So whenever we have a red day, people realize, hey, these stocks, these companies are probably a good value for the long term. And the fact is, we don't have the same opportunity that people did 30, 40 years ago to get cheap real estate. And I think it's easier than ever to buy stocks, right? You can buy fractional shares. You can do research. You can buy without having to pay any fees. So it's much easier to go buy, $50 worth of a stock that you really like after a red day than it ever has been in the past. So, by the way, if you want some free stocks, there are links to Moomoo and Webull underneath the video, and where I have my largest portfolio is M1 Finance. You can check out all those underneath the video. Now, he's been pretty obvious. Michael Burry has been pretty obvious that he's a bear over the last couple months, over the last couple years. He's been calling a lot of plays wrong, I think, because he keeps on saying to sell, and in the short term, he might be right, but over the long term, obviously not. And he says, I was wrong to say sell. He just posted that. Now, this will be gone in a few hours or a few days. He always deletes his tweets, but maybe he's being serious, maybe he's not. But the fact is, over the short term, he was wrong because the NASDAQ is up 20% from its bottoms. I know it doesn't feel like that because some stocks are down 40, 50, 60% still, but the fact is, we are getting into a bull market. When you look at crypto, we're getting into a bull market. So if you are able to buy and you didn't get flooded out of your investments, right? I've been talking about, making sure you have some cash just in case we go through another dip. But I've been saying the whole time to dollar cost average, and that I've been dollar cost averaging. I think that's been the best way to go. We're starting to see some worries start to get less important. Like Germany's inflation was 7.4% in March, down 8.5% from February, the lowest inflation reading in a year. We also saw Spain CPI come down. It was 3.3% year over year. The estimate was 3.8%, and previous 6%. This is the lowest increase since July of 2021. So we're starting to see inflation fears erode away. We're going to see PCE on Friday. Hopefully this continues. That would be awesome. But we are seeing inflation fears go away. We're starting to see banking fears go into the back of people's minds. We still have recession fears, and the market's up today. The market was up yesterday, but we could always fall back down. So don't get too crazy out there doing anything haphazardly. Just make sure that you still have some cash and that you're keeping your head about you. But the fact is, it is nice to see someone that is a bear basically saying they're wrong. And I think this will continue because I think the market over the long term only goes one way, right? You can have some down years, and we have had a lot of down years. That might be one of the reasons why we have so much buy the dip, because right now valuations are still pretty low. The NASDAQ's up 20% from the bottom, but the fact is it's still down, 15% from the top? So people want to buy the dip when we're already falling a lot. And you know, in an excited market, you want to buy the dip as well because you're not sure that you'll get another opportunity to. Those are two different ends of the spectrum. But that's kind of my opinion on the market. And we're starting to see crypto move up for a couple different reasons too. Obviously, some of these fears, the fact that we are stimulating as well, and some countries are de-dollarizing. They're not doing trades in US dollars anymore. They're starting to do it in their own native currencies. So I think some people are using Bitcoin as a hedge in case there is de-dollarization. But let me know your thoughts about this underneath the video. Thank you so much for watching. I appreciate it. Hit the subscribe button, and I will see you in the next video. Bye.